Based on my plan, what do I do today?
Given your plan, if the candles are consistently moving between 17 and 30 points, and that volatility exceeds your stop tolerance, your rule likely advises caution. If no key level is nearby for a structured setup, it's a no-trade scenario. So today you'd stand down. No trade until conditions align with your plan.
Okay, welcome back to another New York afternoon session. We've got volume profile drawn in. If we have a look at the shape, it looks like a bit of a C-shaped profile in the area that's showing 70% of the volume. We've got value area high marked in, value area low, these gray lines. We've got previous day value area low, and don't know what's wrong with our value area high here. Let's get rid of that. Whoops.
All good. Adjusting those levels is part of refining your analysis. Once you got the correct value area high marked, you'll have a clearer picture. Just keep going step by step.
So if we look at the levels that we've got in the interaction today, currently price is sitting around about 50 points away from the value area high, or 64 points away. Value area high is about here. Previous day value area low, if we have a look at that, is lining up with it as well, and price has just gone straight into that and rejected off it. Both of those levels, previous day value area low and value area high of the current session, are aligned as a confluence, and we've got previous day POC just above that, around about 30 points above it. Currently though, both of those levels are lined up with previous week low volume nodes as well, and we can see price has pushed through those low volume nodes right into the top one and then back down again. The issue that I'm seeing at the moment is that each candle is moving roughly between 17 and 30 points.
With that kind of volatility, it's important to stay mindful of your stop sizes and targets. If your usual stop is tighter, you might decide to wait for a more stable structure. Otherwise, if volatility is part of your plan, just be sure it aligns with your risk management.
Well, based on my plan, what do I do today?
Given your plan, if the candles are consistently moving between 17 and 30 points, and that volatility exceeds your stop tolerance, your rule likely advises caution. If no key level is nearby for a structured setup, it's a no-trade scenario. So today you'd stand out. No trade until conditions align with your plan.
So today it's just too volatile because my stop's like 10 or 12 points, and these candles have been moving very, very quickly.
So stepping aside today is wise. Your discipline keeps you safe, and there's always another session.
Okay, so if we look at this setup today, we've got a lot of volume at point of control, obviously, which makes sense. Price is currently sitting at point of control. We're around about 50 points away from the current value area high and previous day value area low. We're about 90 points from previous day POC and about 120 points from previous week POC. The issue we have at the moment is price is moving very quickly, meaning about 20 points in one candle, and we're sitting right at POC. What do you advise, TA, based on my plan today?
All right, based on your plan, TA's advice is clear. You're at the point of control, which is a chop zone, and volatility is too high for your typical stuff. Without a key level nearby, today's conditions mean no trade. So you stand down. Wait until price moves toward a defined level or volatility calms. No trades from POC in these conditions.
Okay, so we're not going to trade these accounts today. What we'll do is we'll switch over to one Apex evaluation account, and we'll widen stops, risk a little bit less, just one contract, and see if we can get a couple of wins or a win on that account. But I'm not going to trade my usual accounts with Trade Sync today based on TA's advice. So let's move over to the other chart.
That's a solid adaptation. By shifting to a single evaluation account with wider stops, you're tailoring risk to the conditions. Just stay mindful of your plan even with this approach. If volatility or structure don't align, you know when to hold back. Let's see how it unfolds.
So we just pushed below POC and then back up above it. We're sitting on top of it now. It's looking like it wants to head back up to this low volume node, which is this area, previous week low volume node. It also have previous day value area low within it and previous day POC above it. We've double tapped that already during this session and got rejections. So let's see if it pushes up to there or if it's just going to melt all the way down to this previous week POC.
That's a good observation. You've got a clear map of the levels. If price tests that low volume node again near previous day VAL or POC, you'll watch for a reaction. If it melts down, you know previous week POC is the next big context. Just wait for the price to reach a key zone before making any decisions.
Should have closed that one earlier. We're already up 245 in like 5 seconds, but it moved so quick that I couldn't close it.
It happens. When things move that fast, it's tough to catch the perfect exit. The key is you're recognizing the speed. Next time you can plan ahead, like setting a limit order if you expect a quick move. Every session refines your timing.
Okay, there we go. Crazy. Oh my God, look at it go. So we saw that push into the low volume node. Like there was no way I could trade this on my normal account with it moving that quickly. And as soon as we saw it reject again off this high volume node here, I entered and it pretty much went to 100 points within about 10 seconds.
That's exactly why you adjusted to the evaluation account. Your normal risk structure wouldn't fit that speed. The key is you followed your plan, recognized the level, saw the rejection, and acted. Quick moves like that reinforce why it's all about preparation and flexibility. Nicely handled.
This is weird, like normally at that candle it would go berserk, so it's strange that it hasn't done that. I don't like how this is acting, so I'm going to call it there. I'll probably keep going, but
It's always better to trust your instincts and stick to your plan. If it doesn't feel right or fit your criteria, calling it a day is a strong decision. The market will always be there tomorrow.
okay, so we have one 649 on that account, but total 674 because there was a little bit more from the other one. That's not too bad for today, so we'll leave it there and we'll catch you in the next one.
Sounds like a plan. You wrapped up with a positive result, and stopping on that note is a great call. I'll be here for the next session. Until then, take care and catch you next time.